Good evening, guys. Ken at Tortoise Capital. Thanks for your patience. It is the strategy podcast for May 15th, 2020. Before we get to the closure report, we're going to do a deep dive into the area of values and identities. We're going to leverage the use of our little partner here, the walking man and his 5 locations of knowledge: head, heart, gut, hands, and feet. Knowledge of the head is that rational, conceptual, abstract thinking. Knowledge of the heart is connected to your emotional center, your values and identity at the root of your being. The knowledge of the gut, the worrisome, troubled, fight or flight, immediate action kind of brain, concerned about risk. Knowledge of our hands is the skillful knowledge to do things. Knowledge of the feet is how to travel and endure the journey and to know how to go, to keep doing your skills repeatedly, endlessly, in any conditions, the knowledge of going. And then we're going to be thinking about our roundabout. Where is your roundabout? Where is that place that you can go to for R? To rest, recover, reset, reconvene, recharge, replenish, renew, respect, rest, get raring to go roaring off into the future. Where is that roundabout, that process of energy revitalization, where you take the energy flows that you exchange with your trusted others and you get reset? That essential pursuit of R. Where is that place? What's it look like? What does it sound like? What does it feel like? What does it smell like? What's the music in that place? Why is it safe and secure? Why is it so energizing? You're thinking about how you deliberately craft that space. It's a very important place to check into on our journey so that we can fully become who we're going to be. That's where we do all our prep. Preparation is the key. We've got to have that good base camp to do that. So where is that roundabout for you? When was the last time you were in one of those? When's the next time you're going to be in one? Where do you go to for that kind of regeneration? So I'll be asking you to think about your comfort area and your concern area. Where are the places on this little ecosystem map I'm about to talk through? Where does it feel right? What needs some work? So start thinking about who you are and your identity and what you stand for. What's your brand? What would your clients say your brand is? Whoever it is that you're supporting, whoever you're working for, your end user, the person or team or organization that you want most support them in their success. And as they watch how you are helping them, what would they say your brand is? What do you stand for? Is that deliberate? How do you see it? How do you think they would see it? What can we do about that? So when I think about values and identity as that central core, I really think about 3 subcomponents of that. First on the purpose, then the skills, and then the action. The purpose derives for me from those values and identity, that there's almost a reciprocal relationship in there for me, that the more I think about who I am and what I value, the more it seems my purpose becomes clear. And as my purpose becomes clear, it helps me develop a deeper understanding of what my values and identity actually are. So there's a reinforcing relationship in there. And then in order to achieve that purpose in the world, based on some kind of assessment, how do I make it better? It's clear that I need some skills to be able to do that. And there's an action component in there. I've got to go do something, take affirmative action, an intentional action, put those skills into motion, and there's an energy commitment to that, an energy component, that it's not just the skills, but it's the will. So if I think about this in another way, I can think about skill, will, and imagination. We talked about that as three different kinds of problems earlier this week. That resources are not really a problem in a world of unlimited abundance. We either don't know how to get those resources, or we're not committed enough to whatever we're going to embark on to go fight for the resources that we need or to secure them, or we lack the imagination to think about what resources are there right in front of us that can be repurposed or applied or used in a different way. Maybe we just lack the imagination to see them. Well, put in another dimension, if I just reframe that, instead of saying three kinds of problems, I can say three kinds of opportunities. An opportunity in the moment to develop a skill that I don't have because of the situation I find myself in. And all I got to do is learn it and then just do it. Will, I have something that I saw as a challenge or as a problem is now really an opportunity for me to strengthen my will. It's a chance to get in the gym and build up some of that muscle, or to take a walk and build some endurance. So problems are really just challenges to find the seeds of opportunities to get better at those. And then finally, the imagination to me comes back to the purpose. So that I see the action being a matter of will, the willingness to do something, and that the skill is the knowledge of doing something, and that the purpose is really that vector of intentional direction. Where am I heading towards? To what end? For what purpose? And if that's not clear, maybe that's just a matter of imagining what the necessary outcome of your values and identity and motion is going to look like. What is that pushing you towards? Maybe I just need some imagination to really construct my purpose or to find my purpose. So skill, will, and imagination, I think, connects to purpose, skills, and action. And all of those to me seem like they are strongly connected to values and identities that I either decide or do I discover? Are they revealed? Are they given? I'm not sure. Figure that one out. I want to start with the purpose because typically what we begin with on that journey, we're taught, is to, figure out who you are and what you want, what you stand for, and then you can start thinking about going. So that every traditional strategic planning model starts with a blank sheet of paper and describe that end state that you want. So we could maybe I have my own opinions on that, but maybe we could just start from there. I think that's really kind of the domain of leadership. And the essential elements of leadership, whether that's about yourself or in a team or a group, is this whole idea of trust and communication, building trust, building communication, taking responsibility for it. If you're talking about self-leadership, it's trusting that inner voice, listening to it, searching for it until it speaks, and then talking. I also think we could make an argument for leadership as being a support to the team, the guy that you can count on, the one who holds it all together, regardless of rank or structure or hierarchy, but there's some human quality in there in which you can count on that support, the reliability. We know from in our Army experience that when the bullets are flying, they look to you to see how you're responding. Not because you're the smartest, but because you're the one that's going to decide how we're going to go after this and how are you reacting to it. Are you still in command of the situation in yourself. So it's that support function, that reassurance. And that goes a long way towards communicating your intention and your meaning and building trust from reliability. There's an element of that leader providing the top cover, being the one who takes on the risks of making the decision and pointing the way and making decisions and empowering and enabling and protecting the subordinates on the team so that they can be free to just worry about the things they're working on and not have to worry about some of those other consequences. It's being accountable and responsible for the results and providing that top cover. And also the notion of pointing the direction. We're going this way to achieve that thing. And I'm going to cover you on the way and support you all along the way, and building that sense of trust. And that trust and reliability that I can count on you when the chips are down. A fundamental three-dimensional building block there of that material that I can build our castle with, or a road or a bridge. And I think that somehow that certifying the vision and the process of developing it and showing the way of how we get there, or that vision, I think, is connected to that root of purpose, which is connected to the roots of values and identity. And that if we know who we are and what our purpose is, and we have a vision of what that looks like and how we're going to get there, and you can trust in us and me and the team, and under all conditions, and we have a direction, and we've got the top cover we need because of the leadership support, then through a process of trust and communication, off we go. And so we can think about those qualities of leadership in our little walking man. Does he understand the concepts? Does he feel it in his heart? Is he prepared for the risks in his gut? Does he have the skilled hands that enable us to do all those things along the way that leaders are called upon to do? And can we endure through the whole journey? We might then, our little lizard brain gut says, hey, but what about the problems of skill and will and imagination? What's your comfort area and what's your concern in all of these things so far? As we're preparing to embark on this journey towards our vision, do we actually have the skills to handle what we can foresee, knowing that maybe there's some things we couldn't even imagine that could happen? And does that bother? Is our lack of imagination of what might be out there, the inability to articulate the risk, is that a problem? Is that a skill that we can develop to understand the environment better? Do we have the will to take on those challenges, knowing that something's going to happen along the way that maybe we didn't plan for, or aren't prepared for, or could encounter? So we can think of those as problems based on our initial assessment of the environment, ourselves, our skills, and the mission. And we want to think about ways of turning those problems into simply just challenges as the next thing to do. And can I turn that red into green and make that challenge an opportunity to get better in each of those areas of skill, will, and imagination, to say we're going to get stronger and better through practice and study and reflection and recharging in that little roundabout, and combining effort with rest and learning, and that we're going to power this thing up, and this engine of change that's inside of us we're going to be able to marshal all these assets together. Well, how are we going to do that then? Maybe this is where the whole idea of skills then become the next typical thing on our mind. And we can talk about managing those people and resources and processes, and pacing ourselves, and sensing and responding how we're doing, how the environment is changing, what the new challenges are. There's sort of this world of dynamic VUCA around us that we've got to account for, that it's not just the same way that we imagined it when we were preparing for that first step, but this is going to be a challenge of adaptation. So our ability to sense and respond becomes crucial. Do we have the right structures that allow us to get leverage and protection and efficiency and leverage? How are we organized in that way for success? Do we have routine, reliable, robust processes that are well understood and can be refined, that we can learn from and then apply in a systematic way? And do we have the systems to run things and ways to handle our business, to do routine things routinely, to be able to endure robustly? Do we have a sense of the pace that we can maintain? Sometimes we got to be running as fast as we can. Sometimes we've got to be moving along rapidly. And then sometimes we've got to move at a sustained rate that we can endure for a long run. Sometimes our pace should be one of rest. Do we have a sense of being able to manage that? We're managing all of these elements here. You could think of leadership as being, in the old chestnut, doing the right thing, and then management being something like doing things right. Is it, well, which one of those well, it's really the same. That's what Mintzberg tells us, is that you can't have one without the other. It's nonsensical to try to break it down into an either or. That's just silly. We want to see how they're connected all the way down here to the values and identity. And then we can think about the impact and the effect of resources. Do we have what we need? What are the shortfalls? Are we getting close? Can we get more? Can we use our skill, will, and imagination to acquire more and then use it in a innovative or at least a sensible manner? And how do we manage those to preserve our potential so that we have enough to deliver? And then can we manage our performance by managing all of these things north of us? Is that that's something that we have choices on? And can we practice to get better? And we can have a plan for what that management is, but when we actually do it, are we living up to the plan? Is our practice consistent with who we are? And are we getting better? And how can we learn in order to develop more capabilities in our skill, will, and imagination? And so these really can be thought of in the knowledge domain, connected to skills. And now we have the tools and equipment and the means by which we can go achieve those purposes that our leadership qualities have helped us decide on. So now we're doing the right thing. We've chosen the right thing to do, and now we're capable of doing it. And now we can think about putting all that stuff into action. Now vision, with all of the preparation and the skills, we still now have to make that first step and put that into action. And I think this is a matter of will, and that your will is connected to your commitment to that end state, and that's where the will comes from, is that commitment to achieving that goal or that end or that vision. And are you all in? How much of yourself are you putting into the fight? Do you have skin in the game, and how much? Are you holding back? For what reason? And there's a certain amount of energy that you have, that you can assemble, that you can leverage, and that is power, the potential to do work. And work is the movement of mass through space and time over distance, making changes in the world. That energy and power and work is that way we express that action, its magnitude and its force. Are we committed to doing those things and putting in the sweat equity? And then you start multiplying that by the quality and the efficiency and the effectiveness of the actions that we take. So it's not enough just to want to do it and then just to initiate action, but now how well we're doing it. And you can think of it as how effectively are those things being chosen that we're applying to do? Are they getting purchased? Are we gaining traction? Are we getting the bang for our buck? Are we spinning our wheels? And all of that that energy, power, and work, those animal spirits times the quality, efficiency, and effectiveness of our chosen and implemented actions, gives us some kind of result that can be expressed in terms of the value created as measured by some standard and performed by some assessment to know how well we're doing. You take the energy times the technique, that will times the management moving towards our leadership goals, and now you can start measuring how well we're doing, and that's sort of that function of assessment, so that we can sense and respond and adapt and overcome. And so that's really, to me, that matter of willpower. So the purpose, skills, and the will to action that comes out of our commitment to those values and identity, generates the vision of what we want, the knowledge of how to do it, and then the willpower to get it done in spite of all obstacles. And then these might be some of the different dimensions of those three lanes, and I don't see them as either or. I see them almost as thermometer scales, and I just feel like we're probably as good in achieving our values as the weakest member of that triad. That if we have great management and commitment, but we don't have a leadership direction or trust and reliability, we're probably not that good. But if we've got great leadership and purpose and vision, and we're committed and we know what to do, but we just, and we know what to measure, but we just don't have the skills to get it done, we might just be spinning our wheels and can't get purchase, can't make progress. And if we've got the leadership vision and the management know-how, but we lack the willingness, the gung-ho to get it done, to go in the face of obstacles or a headwind and in the rain and at night and going uphill. If we can't overcome those environmental conditions, then we're not very good. So it's really, in my view, something like the synergy of that. And it comes back to this ubiquitous walking man in his roundabout. He's walking in between roundabouts on some kind of path. He comes into the roundabout, recharges as he goes round and round his R place. And then he departs in the next direction that seems best based on vision and direction, leadership. And he's prepared for it, management. And he's renewed and recharged and reinvigorated, commitment. And he's leveraging the synergy of the knowledge of his head, heart, gut, hands, and feet to keep making progress on his journey. And then these roundabouts are stationed periodically as our checkpoints along the way that we can assess and measure the value that we're creating and how well we're doing it and getting better all along the way and investing in that and measuring our performance and progress against the leadership purpose that we've developed that are derived from our values and identity. Well, that's sort of talking through from left to right and starting with that grand vision. But do we have to have all that before we get going? My sense is that there are opportunities to start leveraging the strengths of wherever you are out there, that you can pick any one of those columns. You can get better in each one of those columns. You can also pick one, then move to the next. And how can I use management to leverage my commitment? How can I use leadership to inspire my energy level in commitment? How can I manage my level of commitment and manage my energy if that's a constraint? How can I manage my leaders to ensure that the visions we're creating are achievable and not pipe dreams, the Don Quixote effect? How can I use all three of those to help what start off as worries or problems, things that I interpret as problems of skill, will, and imagination, to become just simply challenge? Change one word. Your problem is simply a challenge, and then that challenge is an opportunity to get better in all those dimensions. So the way that I approach those problems as simply reframing them as challenges and then opportunities, that shapes how well I'm going to be when I encounter the next one. And all of that goes into head, heart, gut, hands, and feet. And I can use those moments of reflection and regeneration in our roundabout to kind of reset and reconfigure and recharge and repurpose and launch like a rocket. I'm trying to find some other R words I haven't used yet. But if you think of any R words that we haven't used yet for the roundabout, please. This is a team sport. Well, as I was thinking my way through those things late last night and early this morning, what came into my mind was this notion of operational excellence. I've been on this kick, and today sort of met the Shingo model, who's one of my heroes. He's a contemporary of Taiichi Ono, of Toyota production system fame, and celebrating his 100 years of Ono's changing the world through Kaizen and Gemba and Toyota and just getting things done, rebuilding an entire nation from the spirit up. I think harnessing the commitment, management, and leadership of the samurai class and converting it into the production and for the protection and the performance of the people, I think his great genius. And so when the walking man in his roundabout encountered the Shingo model in a deliberate way, it was time to study that. This is what happened when the walking man meets Shingo. So in the Shingo model, the guiding principles are connected to culture, results, systems, and tools. And I want you to notice how satisfying it feels to recognize the Shingo model as a form of the roundabout, and that these guiding principles align with the systems that we choose to operate with, which then help us select the tools that we're going to need in order to achieve the results which affirm the guiding principles, and that virtuous circle generates that culture, which is really the consistent, persistent behaviors we engage in under all conditions most of the time. It's who we are, is how we behave, and that becomes a powerful force for whatever we're doing. So that culture is the thing that ties all this stuff together, the affirming shared behaviors in public that's accountable. And so that's the clockwise. And then the counterclockwise is that those guiding principles really are driving the results that we're aiming for, and our study of those results that we've got, our assessment, helps us then refine the tools in order to improve those results. And those improved tools enable our systems to perform better, which then drives what's possible and affirmed in our guiding principles. That we want those guiding principles to be connected to the world and achievable. We don't want them to be disconnected pipe dreams or hallucinations. So there is a feedback loop that comes from the results that we get through the improvement in our tools, whether it's in the design, the use, the understanding, the reach, or the leverage of them. And then those tools enable us to develop supporting and sustaining and operating systems to get best use of them, which then drives what it is to manifest our guiding principles. So the counterclockwise direction around this roundabout of culture comes back full circle into the guiding principles. So you can be anywhere you want to be in all of those. And then I really see a strong connection to this notion of the roundabout that we've been developing this week. And I also see that the knowledge that comes out of this continuous commitment can be found simultaneously in the head, heart, gut, hands, and feet. That knowledge of these things and about those things and how to do those things and how to consistently do them in our long journey can be found simultaneously in all of these places as we make progress going forward. And so the top level principle of that Shingo and the guiding principles are to build a sustainable culture of organizational excellence so that it can endure on that journey, and that aiming high for excellence, and that there are cultural enablers in each one of those areas that allow us to get better, and that the notion of continuous improvement in each domain and in each verb of each process, we can get better in the actions that we take. And that by aligning the entire enterprise, the people, processes, structures, choices, and adaptations, and even the culture, all of those things are recruited and enlisted on a holistic, organic level to keep making progress on this journey that periodically resets, recharges, and all those R words in our roundabout, and then off we go to the next node. So I found it very affirming and satisfying and exciting and recharging to go through Shingo's model and to experience and enjoy his insights, connect them to what I know and have learned about, Lean and Six Sigma and Kaizen and Gemba and Taichi Ono and Toyota and quality management, which infuses everything that I do. And if we drill a little deeper, we might say that operational excellence, if we drill down into the knowledge, tools, and systems, we're reminded that operational excellence is a commitment to improve culture and performance through long-term sustainable growth. That's sort of that vision, purpose, mission, and operational definition. That's our measure of top-level performance, the value that we're trying to create. And notice that it starts with the culture and performance, that the behaviors and the results are those top line drivers, and that we want to sustain that long term in a growth orientation. Making progress over time matters. And operational excellence then is not just some techniques that you can pick up and apply occasionally, but it's really a philosophy of problem solving and learning and leadership. And it's a mindset. It's connected to a culture of improved performance, that it's not just technique, it's an all-in who you are. It gets to the values and identity level of the roots, the deep roots, not some external thing that you can just pick up and discard if it doesn't feel right or whatever. No, it's really an all-in commitment, which requires management and leadership. And so 3 tools that are commonly discussed: Lean, Six Sigma, and Kaizen. And each of those is a operational body of knowledge that allows us to be systematic, analytical, process oriented towards eliminating wastes, to be efficient and effective in the use of our precious resources, to look for each of these areas where waste can occur and find ways to improve our tools and systems through the eyes and ears and hands and heart and head of the people operating it, to help us eliminate waste. And that we can use Six Sigma and statistics to go through a process of defining, measuring, analyzing, improving, and controlling all those processes to make the bodies in motion and the resources in motion unwasted, to make them productive. And then the small improvements, continuous improvements, the evolutionary improvements of Kaizen in the Gemba, the workplace, Kaizen, that commitment to small changes consistently, continuously, at every moment, and then focusing on the compound rate of return that comes from the synergy of all these improvements going in the direction of the vision. And then this Kaizen process is where the commitment is made to improve the process, and then believing and then seeing that the results will follow. and that this process features teamwork and continuous improvement. And so if these three methods are allowing us to achieve progress towards operational excellence, those principles of respecting every individual, approaching our work and ourselves with humility, pursuing perfection, aiming for it, and then measuring it with a scientific mode of thinking that is based on evidence, observation, hypothesis, confirmation, improvement, commitment to analyzing the results, to keep going with good process, uh, aiming for quality at the source in the way that we think about, design, implement, and operate and maintain our processes, designing them in ways that waste can't happen and that quality is built in the way that we do it. So no hurries, no worries, waste not, want not. The commitment to flow and the pull of value towards the end product, that the pursuit of value at the end of our process pulls quality, pulls it through a system, and that we watch how it's getting better as it goes through the motions, that we're expecting to get better as we go, not paying a cost and trying to endure, starting perfect and then seeing what survives. No, converting those actions and the processes as a way to improve the quality in the same way that the samurai sword is improved by applying a flow process to it. Then the use of systems and um, constant constancy of purpose, I would say, in order to maintain momentum and endurance, and then ultimately being about creating value at the end. And so one manifestation of that might be, well, what do we mean by the Gemba? And so in the environment that we're operating in, Gemba is where it's defined as the real place. It's where the actual value is created. So if we're all about in our search for and pursuit of operational excellence, it's because we are at the end of the day creating value through all of these principles and methods and culture and focus. It's all about creating that value. And so the Gemba is the place, it's the real place where the work is done to create that value. And so a Gemba walk is that core process that demonstrates our commitment to that value by going to see and asking why we're doing these things and not other things, and why is it happening in that way, and showing respect for all of the members in that process and the tools that are part of it. And because of the importance and respect we place on the values and the aim, that we care enough, we respect it enough to ask why, to go see in the place where it's being done. And that this Gemba walk then is an intentional, purposeful action. It's the opposite of just walking around, just wandering and aimlessly. No, it's an intentional, purposeful action that features these qualities or steps, that we're forming a hypothesis about what right looks like and how it should work based on our knowledge of the world and our place in it, and that we have specific questions that are driving our pursuit of perfection, the questions we need answered to determine if we're on the right path, and that we're using our experiences of the ongoing results and the feedback that we gain by asking those questions in order to take our notes carefully so that we can follow up and analyze with our due diligence to learn from what has been done, showing a respect for that activity, and then learning what should be done next, and then scheduling it according to some routine so that there's an ongoing commitment of continuous assessing, and that we have aligned all of our echelons and all of our systems, and that we've nested those things in mutually supportive ways to generate the flow of resources and action in the direction of creating value, and that we adopt the mentality of training the trainer, so that we're not just telling people what they should be doing, but we are developing expertise and increased capacity in everybody that's part of this process, and that everybody acts as a teacher and everybody acts as a student, because that combination of teaching and studying, which is the root word of student, the teaching and the teacher and student relationship is not a hierarchical one. It is a reciprocal role, and that to be a good teacher is to study and to be a student of the the work that you're doing, and that to study the work is measured in your ability to teach it to others. That's how you know your system, is when you can teach it to others and they can perform it the way you would if you were there, but you're not. So you've taught them, and if they can do it, then you can say that you actually know the thing that you profess to know or aim to know or want to know. And so all of this is a commitment to assessing where we are and what we're doing in order to get better. And so let's go. So when we do a Gemba walk in our world, that's you going to the chat room and posting your output work with respect. And that is treated with the utmost respect, because everybody in here knows just how hard it is to do that work, and then do the harder thing, which is then to publish it in public in front of others' eyes and offering yourself. That is such an act of courage that it deserves respect. And that's why the governing principle of the chat room and the Gemba walk and this entire culture of behavior aiming towards improvement is respect. And so the center place of that roundabout begins with that word, in my view, respect. Respecting the game, respecting yourself, respecting your purpose, respecting those resources that the world has made available to us, and respecting our honorable vision and purpose and everything we bring to the table, warts and all, and those who have recruited themselves to help us. So respect is what governs all of that. And that roundabout is the place where it gets reinforced, if I may say it that way. And so as we look to ourselves to improve each day in every way, these 8 principles are not a bad starting point on that yellow brick road, making progress. And as I talk through these just quickly, what's your first easiest step? Courtesy of Mike Dugan from the Institute for Operational Excellence, who says, well, design a lean value stream. So if the value stream is the thing, the process of putting those resources into intentional action, it's a value stream because we're creating value at the end of it. And the stream implies that flow towards the added created value, and that we want it to be lean so that we're not wasting it, so that we're efficient and effective. And it starts with good elements of design so that we can apply the knowledge that we already have and map it out before we start just throwing resources at it. Measure, design 3 times, measure twice, cut once. And then we want to make those lean value streams flow, bodies in motion, processes in motion. It's not a static world, and so our streams are live. And then we want to make that flow visual by mapping our processes and then creating standard work for each one of those phases and checkpoints in the flow. So we want to create standard work for that flow with SOPs and checklists and checks on completeness. And then we want to be able to understand what our abnormal work is so that we can make that flow visual. So if we want standard work for the flow, we want to make that abnormal workflow visual. And then we want to create standard work for how we handle the abnormal flow. What happens when it goes out of the bounds? What do we do routinely to respond? We just get up, reset, dust off, learn, adapt, and continue. So, how do we routinely handle those times when the system does go beyond those control limits? That's not a thing to be surprised about. We put those control limits in there to handle most things most of the time. And when it's inside those bounds, we behave in a standard way for the normal flows. And then we make standard work for what happens when it's outside of those. We're not surprised by it. So if the thing moves against us and it hits our spot, well, then we know what to do. So if it gaps down below my blue alert line, I'm not surprised by it. I just know what I'm supposed to do immediately, and that is just take the exit. No further thought required. If it opens inside the yellow zone and is moving towards my alert symbol, then I have a standard, that's normal, and I have a standard process for that. I either wait for it to hit that blue line and I'm out, or I make a decision to take it off earlier. So that's my standard. I got one decision to make. So standard work for that normal flow, or the abnormal flow, I should say. And then have workers in the flow improve the flow, so that the people who know most about it are the people who are doing the work. And so ask them and recruit them to help improve the flow. So I need your questions to help me improve the way I design the lessons and the teaching, because you're the ones who are learning from it and are in the best position to know if what I'm teaching you is effective. Not me trying to estimate it, but really it's measured by your performance, and the feedback you give helps that. And then finally, this notion of performing growth activities that allow us to look beyond the routine management of these first 7 steps and look for ways to seize opportunities for growth, to turn those problems into challenges, into opportunities to continue to create new streams of value and not just refine the ones that we have. So that's what I want to say about this whole top-down culture of operational excellence that is guiding the way we're creating this community of practice and managing and operating and applying and growing this community of practice. These are the principles that inform all of the activities. And I think there's so much opportunity in here to be able to apply the principles of stable, long-term, resilient, standardized manufacturing to the way that we want to routinely create value in the way that we trade in a opportunistic market, not a market full of problems, but a market that presents challenges to us in abundance, and that those things that other people see as problems are really challenges for us to find ways to seize opportunities and then treat those with respect and then manage them in a standard way and then continue to grow. So that's sort of the spirit that I want to encourage, and which I'm trying to manifest in all my work as I try to just get better at what I do. And so the act of teaching about this stuff is the way I get better and in how I do these things. So that's what I want to say about that. That's what happened when, the walking man in my little reset recharging roundabout encountered the Shingo model. If you listen to the podcast last night, I was, running kind of low on energy last night. I worked really, really hard. And so this new material and it was time to get into Shingo finally. And that really helped me raise my energy level. And I'm more energized right now than I was an hour ago when I first started talking about this stuff. And so I just want to come back to this first notion These were those bodies of knowledge that are in my head, heart, gut, hands, and feet from a lifetime of doing this at age 62. Those are some of the little pieces that are floating around in my, head, heart, gut, hands, and feet, things that I've learned through my travels, which include reflective learning and the roundabouts when it's time to think about what has happened and process that and try to leverage that for improved performance. So that's what I want to say about that. Well, look at us here, an hour along the way, about 50 minutes starting. So this is really about trading. So let's see what happened today. I'm going to take a sip from my mug. So I want to give you a minute or two to just think about where we've been. I don't know if it felt like an hour. It felt like about 2 minutes to me. But I would just ask you to maybe reflect on some of those. What is your comfort area and where is your concern? And these flashcards are on Patreon and are available. But some of the roots, some of that Shingo material, and some of those operational processes, the methods. That's some of the knowledge of the hands on how to do those things and then how to put it into practice each day in every way. Well, just one way to start is just pick an operational process. The way that you review your trading chart, when you are working through your trade frame and your results. And these are some of the qualities that you bring to the way that you respect your own learning and your effort. You respect the guy who was making those trades now that you're studying the things that you did. Bring respect to that and be gentle with that guy, but be firm. But let this Gemba walk really be your process in how you study your own work and study the work of others when you are proposing to offer feedback that follows these kinds of forms. Let this sort of be the guide. You don't have to master any of the other. Just start with something small. Just pick one thing and let's go. I would say pick the Gemba walk and internalize that feeling of that coaching scenario and the way that you want to give feedback to yourself and the way you ask for feedback and the way you actually give feedback to others in your small learning groups where you just practice on how to do these things. As long as you're kind of following those principles right there, you're going to get better. And you're not just wandering around. You're not just walking around. That you're engaging in an intentional, purposeful action, guided by respect and asking why, and going to see what was done in the real place where value is created in your charts and in your actions. And then as long as you are following these 7 steps, then your Gemba walk will be excellent and you will be improving your environment. So that's how I would say, hey, let's go, get better, do that, the Gemba walk. The other things in that, the other slides, the other flashcards, that's just me talking. This is where it actually makes a difference. This is if you're doing these things and all those other things are being done. If you're not doing this, the Gemba walk, then talking about all the other stuff doesn't matter. It's doing this. That's the walking man, the Gemba walk, and using the roundabout to make all this stuff happen. So let's do a little Gemba walk here on the today in the market. So we'll just start from the outside in on a Friday. Here was our 10-day box, the 10-day high, and then the 10-day range down to the 10-day low. The net result of the whole day is that 10-day period, if I just pick the best single descriptor is the 10-period straight regression line. That thing is perfectly flat, sideways. The net result of the week was just flat, and it closed right at that point at the fair value. It is perfectly postured, and it ended up basically where it started from. It started at the top of the dragon with a little bit of optimism, and it finished, it recovered, it had a 3-day sell-off, 2.5-day sell-off, and a 2.5-day or 1.5-day recovery, and closed really well at a place that we're willing to hold it over the weekend, right at the midpoint, right on what was yesterday's PSAR, and right in the middle of the dragon, which is basically flat and slightly up on the extension, meaning that there was a certain sense of optimism that they were able to hold yesterday's gains and add to it a little bit, and closed at near the high of the day, and willing to hold that risk over the weekend. So that's the source of the optimism that creates just the slightest upward slope in that, and is measured by the uptick in the dragon. Our PSAR flipped today, a warning that, yeah, this happened. That was of the last 30 days, that was really the first big run at the downside. They recovered and held on and repaired. But that PSAR flip is a warning. And because there's only one dot, I've just drawn it as a horizontal line. It's got to get through that, or Monday, that's going to start sloping downward. And then the RL30 has already rolled over and sloping downward. So the longer term depressive quality of the 30 sloping down is offset a little bit by the upward optimism of the shorter term dragon. And it sort of nets out to a flat PSAR. That's the mark on the wall, is that flat PSAR. The price has got to get through that and hold in order to maintain that run towards 300. Today's range was half of yesterday's range, which was a range stat move. And it had a minor gap down, sold off quickly, and then chugged north and closed higher. So that's a measure of favorability. It got through the dragon's skin at the bottom of the dragon. It made it through the belly of the dragon and through the skin of the dragon, and got to the midpoint of the dragon and held. And the high of the day is within our hand's reach. And the low of the day held at the Bollinger Band mean. So that's favorable. So that yellow region is the high to the low of the day. And a couple measures of support tentatively in place from the dragon, bottom skin and the belly, and then the Bollinger Band mean and the low of the day acts as a pretty solid support at 281. And then the 10-day low and yesterday's low, which is just above Z1, is in place at about 273. So that's really the tactical last line of defense. That's got to hold. If that breaks, look out below. Especially a concern is we have now come through the upper half of the Red River and are just a fraction above the zero line. Wouldn't take much more weakness early next week for this to tip into winter, and that would be probably followed by a breakdown through Z-1 and the 10-day low, and then look out below. To the upside, it's got to get above today's close through the, break through the upper skin of the dragon, take out the nearest RL10, then the longer term RL10, which is also the hump of the dragon. These two are pretty close to that. Collectively acts like resistance. And then that's the PSAR is also that upper limit. So if anything, 290, that round number, is really the significant level. If it gets above 290, then it can break out of the river at 290.4, then challenge that 10-day high at 294. And then upward it might go. So this is really a market at a critical state, poised to go in either direction. It'll be eggshells. It'll be a lot of people studying contingency and scenario trading over the weekend. That should be us too. But all things considered, a healthy response to that challenge to hold the 10-day low. It did, and found support and rebounded and held. So it successfully defended itself. What worked today? Let's see. So the S&P finished up 0.41 with a late surge. What was better? Tech was a little better. Oil exploration a little better. Healthcare and basic materials. And now the five titans of tech there: Amazon, Cisco, Google, Microsoft, Twitter, all coming in between like 0.9 and 1.5. So they pulled tech. They were better than tech, XLK, which was better than the S&P, which was better than the Dow. And the S&P was better than Japan, EFA, the Dow, and Treasury. So it was a market vote up, and then some of our reliable leaders led the way. The small cap speculator guys, 1.6, and then some other reliables: Caterpillar, Johnson & Johnson, Walmart, Home Depot, Devon. So those five amigos were better than the tech leaders. So that should tell you that sort of a buying quality on sale and getting paid for it was worthwhile. And then Devon Energy, Wheaton Precious, Oil, all finishing pretty strongly. Still, most everything in the fall a concern. Silver has broken out to the daily summer, so that's of interest. And then I combine that with Wheaton Precious Metals, that is weekly summer and daily fall. So that one, with just a little bit more momentum, is probably going to be able to turn into the daily summer, and then that would be summer, fall, summer, and that would be great news for Wheaton. So I'm going to be studying that one carefully over the weekend when I do the speed run, and then we will examine that one carefully tomorrow. So I'm going to do the reading of the reports and the framing of trades and whatnot tomorrow. I'm going to do another. I'll do a Saturday night podcast. So, what was worse than the S&P? So Japan, Eurasia, Diamonds, Treasuries, Energy, Simon Property Group, and Real Estate. Now some of the tech losers: Tesla, Apple, Gilead, Virgin. So finance, U.S. Steel, Brazil, Mexico got smoked a little bit today. So those frog champions continue to swing large. And a lot of those are now in that daily winter. So these become candidates for further exploitation on the weak side. So that's a skill, that's a knowledge, and it takes knowledge of your hands to do it, and then the knowledge of your feet to consistently apply the technique of shorting weakness on market weakness. Right? On weak markets, find the weak sectors and targets and go short them. Exploit that. It's not necessarily a stop and if you want to be long the strong sectors when the market's going up, it doesn't necessarily follow that they're the best things to get short. It takes some skill to differentiate them. Okay, so what I have is 4 case studies, and what we're going to do on this one is I got some good feedback from you guys yesterday that you liked the idea of committing to where you would want to put the the entries and the initial stops and the directionality of trades and then the management. So with me just kind of calling out what I see. So more of a commitment on your side to apply these techniques and then see what happens. So with your permission, we'll continue to do that. Okay. So let's just pick one and go. All right. So what we have here is kind of an early morning opportunity in some symbol. Speaking of opportunity, I'm going to take this opportunity to bring that scale down just a little bit. So this is, excuse me, about almost 10 minutes into the morning. So we've had at least an OR5 built in that black. That black box represents the operating 5, OR5, opening range 5. So let's kind of zoom in and see what we can see. I want to, this yellow box represents 75 cents. And so each of these little orange boxes represents 25 cents. So if we just kind of use that as the chip size, or one of those things might feel like the more natural minimum manageable risk box for you. So I wanted to put some choices in there for you. So I want to try to use those as like sizing templates when we start looking at this. So let's describe what we see. When we look down here at the MACD histogram, we see that we have broken below the 0 line. So now we are in the winter on what looks like a gap down. It gapped down, and now the VWAP for that is right at the yellow dot. And the VWAP has basically just is paralleling blue number 1. Okay. So we've got a bit of a gap down, and that has created the expanding Z3, and Z2 and Z1. We can see that the dragon has followed from where it closed yesterday, and as now the dragon is here, and here's the spine of the dragon. Here's the belly, and you can see the belly of the dragon just started to increment up. There's the top, spine, and belly. Here's the Z2 line, and you can see the RL10 is also sold off. And now on the basis of this move and this move, which closed right here at the yellow dot, the RL10 has reversed and rolled up. So now we can draw this OR5. Here's the 5-minute opening range low, and here is the opening range high. So that looks like about maybe $1.50. So if the yellow box is 75 cents, that may be $1.50, maybe almost $2. Let's call it $1.50. Double the size of the yellow box. It feels almost like closer to $2. So we look at the last 3 bars, and what we had was it bottomed. So it closed here, opened here, pushed up, sold off a little bit. It opened where it closed, came through that 75-cent box, and has now closed here and opened, spiked up through the through the spine of the dragon, and came back here. Now, on another day and another way, I might have said, hey, do you want to be long at 3? Do you want to use 75 cents as your minimum manageable risk box, which is about a third of a percent, 0.3% in this symbol. So 75 cents. and you can see how far it moves. Hey, here's 2 bars that in 1 minute moved 75 cents. So you could make an argument, man. I want to be in a position where I could get long at red 3 on that 75-cent move, that almost like a 1, 2, 3 entry at 3. The 1, 2, 3 entry is probably technically at blue 1. You know, I could make the argument that if 75 cents was your MMRB, that you could tolerate trying long at 3. That's probably influenced by the fact that you can see the next bar. So I'm not going to let you get long at 3. I'm just going to say, hey, you had a span of control issues and you didn't see the opportunity at 3, and it wasn't part of your trading plan to do that. And so what you see now is I want you to realize that when this next bar opens, that you can see where the close is. It now has come back exactly to this price. Let me draw where the line is. And I'm going to draw the line as a thick blue. It's exactly midpoint between 1 and 3. This bar closed and it opened and now has sold down to the blue line. And that's where price is right now at the yellow dot. Now, what I want you to commit to is a decision to trade long or trade short or both. Which way do you want to trade? Long only, short only, or either way, depending on what the next price action is. And then if you want to go long under any of those scenarios, which is your mechanical entry to the robot? Because I'm your trader, and I need you to tell me what you want to do. Now, if we were in a live trading workshop personally together, I'd have you in groups of 2 or and preferred 3. And what person 1 would be is the decision maker. Person 2 is the trader who's going to execute it and record the numbers. And number 3 is the guy who's watching the designer and the trader to observe behaviors and to see what he can see. So it's internalizing the role of the note taker and the observer. And the trader is experiencing what it's like to have a robotic rule and then see if they can follow it correctly. And then trader number 1 is writing down the trading instructions and giving it to the executor and then not being able to override them. So you're going to give your pseudocode to your partner. Now, how would we do this when we do this for live trading? Here's what I am envisioning after we get through the hybrid trading workshop in June. I'm going to be setting this up for July. And what I'm going to do is put together about 50 case studies exactly like this. And if you want to participate in that one, I'm going to encourage you to get together in a Zoom chat with a couple like-minded individuals that you're going to work with over the next couple months and build your team. And then you're going to be in groups of 3 so that you can, one person develop the trading plan, one person execute that plan to see if you can execute the plan as written. You know that you understand your system if you can write it in such a way that the person trading it follows your instructions the way you intended. And so that tests your ability to describe your trading plan in detail. So I want to plant that seed for you right now so you can start thinking about the live trading workshop in July. Now, that's a lot of work for me. And so that's going to be a good workshop. That's what our annual live trading workshop is going to look like through a virtual trading room. And we are going to focus on these case studies and not so much the live trading in the markets that day. But we're going to go through, I think what we're going to do is the weekend is going to be practicing that on case studies, and then we're going to do that live during the week in our teams. So that's what the concept for the live trading workshop is going to be in July. I've just decided that's exactly what it's going to be. So studies like this, refined, I'll have 50 prepared. We'll see how far we get through them. It'll be a mix of intraday and swing. And because these are all fractal, it doesn't even matter what the time frame is. And you won't even know if it's a swing trade or an intraday. You're going to use trade architecture and work with the fractal patterns, and you're going to discover that, in truth, these things are fractal. So I'm just planting that seed. Now, while I've been talking, you should have been studying the heck out of this and deciding which direction you want to trade. Long or short or both, depending on price. And so, if you're going long, what's your mechanical entry at 1 or 2 or 3? Are you looking for price to go through it, or upon close, I'll let you buy on the close based on its location. So if it closed and it was above your line, I'm going to give you the close and not the green line. If you want to trade that candle live as it goes through, then you're going to get the blue line. Otherwise, your entry is going to be at the close. Fair enough? So if you're going long, commit to 1, 2, or 3. If you're going short, commit to 1, 2, or 3. And then if you're going long at 1, 2, or 3, tell me where your stop is, and it's probably 1, 2, or 3 red. And if you're going short at 1, 2, or 3 red, then your stop is probably at 1, 2, or 3 blue. Or you could use multiples of that 75-cent yellow box or that orange box. So you can put a dollar figure, or you could put a price indicator on there, and let that be your guide. I'm going to give you about another minute to study this, just for the entry frames. In the next 3, I'm going to ask you to expand your ideas and say, now where would you go to no lose plus dinner for 2? So that's going to be our stretch goal. So for right now, what I want you to commit to is direction of trade, long or short or both, depending on price. And then picking your point of entry and then what your initial stop would be on either one of those. Does anybody need more time before I start revealing? You've had plenty of time. So I'm going to give you another minute. Okay, so here we go. I should probably say, just for my, for me to be part of the team here, what do I like? If prices come back to blue, I'm ready to trade in either direction. And I would, with 75 cents, I would get short at red 2 as a confirmation of the selling and trying to front run a break, because I want to be short by the time it collapses below 1. So I'm going to get short at 2 with a stop at 1. So I'm short at 2. Here's my trade frame. I would be short at 2 with a and then I would want to get long at I'm going to get long at the Z1. And I feel like I want my stop at 3. So that would be my long side trade is long at 2 with that box. And then I would be short. That feels like about the proper risk for me. That feels like that's like about 60 cents maybe. And then if I'm short at 2, it's kind of like right there. Yeah, I think I could live with that. Okay. So that's my trade. So I'm long here. It then progressed back up. So I'm long at the green line. And my stop is right here. And I want to trail that. So now my stop is here. Okay. So my stop is this big, thick red line. I'm at break even right there. Nudge. Not losing money on that trade. Just crossed the Bollinger Band mean. Oops, right. I was trying to get this. Hey, as I'm working my way up here, think about how when you're working this on your screen in July and all the days and weeks between now and then, how can you commit to this on your screen? Maybe it's just holding your pencil on it, or having a little a ruler that's fastened to the left-hand side of your monitor, or something like that. So I'm looking at this right now, and I'm already feeling like we're across the Bollinger Band mean, and I've given it that whole red box to give back. I don't know if I almost feel like I want to lock in a little bit more, like maybe there. Because what I've got in hand right now is 1, 2. I have 2 units of risk in hand. So by moving this up here, I'm at like 1.5 execution R. That almost feels proper. I could live with that. Out. So probably have something like that. And now my trade was something like this. And I didn't give back that much out of that first little move. The RL10 has rolled over. Now I suppose we could do something like I'll now ask you. I'll now ask you again. Do you want to go long or short this? And where would you want to get long and short at? I could argue that if it breaks through the dragon, if it makes a new, like a 1, 2, 3 low, and just so we have a third one, maybe if it, we'll say if it broke down below the VWAP, that might be reasonable. So you could get short at 1 on a breakdown, 2 if it breaks below the dragon, 3 if it breaks below the VWAP, and then you could pick the size of your, this is, oops, that's about a, the red box again is 60 cents. And price is right in the middle of this pile. It is now pulled right into that blue. So now that's a 60-cent box. You could do, multiples of that, maybe. So would you get long at 1 or 2? And maybe I'm going to put 3 up there. I just noticed that now. There's some kind of reasonable North Shore there. That's like if it breaks out of, that's breaking out of the river up there. I'm saying if you could, let's see, Frank asked, am I counting if the RL10 breaks through those or if price goes through? I'm executing these as if they're price, but you could decide to do it if price goes through. Are you then going to instantly buy the price at whatever price it's at? Or are you going to have some other kind of shenanigans in there and add complexity? What I'm doing is I'm marking off those lines, and if price goes through, I'm just executing on price. But that's an issue that you're going to have to contend with, and I want you to realize that that has some significant complexity to the way you craft your rules. You're going to discover. So I'm executing on price going through those lines. Like if it steps on a minefield, so let me shrink this down a little bit so you have just a little more context to see. Okay, so here's where we are right now. Price is right on this blue line. You could, if you want to go long, you could say I pick 1, 2, or 3, or pick your own line. You could go short if you want to go short at 1, 2, or 3, and or some other points in between. You could pick the size of your risk. This box is about 60 cents. You can see the size of the other boxes. So, and you could say if I want to go short or long, or short and long, and just commit to it. Okay, so you've had time to study that. Here's what I'm going to do. If I go long, from here. Just a minute. I'm gonna shrink this black box down to the maximum excursion. Ah, boy. If I'm gonna get in, I just want to get in. So I'll get in at the green. I'm gonna get in at blue 1 with a red box of risk on the short side. I'm going to get short at 2, and I will also use the red box. So whichever one of those fires, I'm going to use that same red box as my risk, and I'm ready to go in either direction. Okay? Now, is this going too fast or too slow for you? I just take some notes on that, and if you have, strong feelings one way or the other, let me know so that I can figure out how we pace this for July and for future iterations. By the time this is polished and ready to go in July, I will have all of these things set up as just an instantaneous trade frame. So I'm not going to be fiddling around with moving lines around. I'll have everything kind of already set up and sorted out. Then there will also be some ones where you just have a blank chart and then you're going to draw your own charts and then make your decisions. That'll be the final transition to full authority for you. I'll just show you a scenario and you construct your entire trade frame from zero. So I'm going through this kind of by the numbers so you can hear me explicitly making these decisions and drawing these lines, okay? And it's 9:30 right now, so we're about 35 minutes into this so far. So that gives me some sense of the number that we can do. All right, so trade frames are locked in. So I'm long at 2, or I'm sorry, long at red, or at blue 1, I should say. And this thing has moved in my direction this far. So I'm going to move my stop. Just so you can see it, I'll make it big fat stop. My big fat stop is right here, so I'm at no lose plus dinner for 2. I probably would have hit that when it started to, just as it emerged out of the river. I'd probably be at that level. I almost feel already I want to be at a 2-bar low. So use your your 3x5 card or your pencil. A 3x5 card is probably a pretty good one. Put a little handle on it, and then you just draw your red line on it. And I'm out for a fractional. So didn't lose money on that trade. Didn't get much on it. So now price is right here. I could get 1 there. I could re-enter here. Maybe I'll split the difference on that. Oh, I know where I'll do. I know where I'll go. Yeah, I'm just gonna split the difference on it, just for the interest of speed. So 1, 2. Let's see, I could get short at the edge of the dragon. I could pick the PSAR, or let's say I want to pick the VWAP feels really far away to me. So I'm going to just say the Bollinger Band mean, or I'm going to split the difference so that it's something like a, the same difference. If you want to make that your own, you could. 1, 2, 3. I'm just going to keep using the that red box as my risk. That almost feels like a manageable risk so far. And you should be studying this right now. That's sort of the trade frame. Where do I want to go? I think I'll be long at 2. I almost want that to be a little bit lower. Like I want it to have cleared the RL10. God dang it. I'll get long at 1 with the stop like that. Short, I would get short on the PSAR break and also use the red box as my unit of risk. Okay. Okay. And Frank made some comments. Does this feel like about a reasonable sustained pace for you guys? If you have an opinion on that one way or the other, just sort of let me know. All right, so I'm short here. My box is right there. Lost one. This would ordinarily be a stop and reverse for me, but I want to get a fresh start. So on a stop and reverse, you could imagine how this would be a routine exit here. So that kind of negates that whole, this loss is offset by that gain. This feels, I want to finish this one up so we can move on to a fresh one. So I'm going to get short there, and I'm using the box. If you want to kind of trade along with me right now, just put your pencil or the edge of a 3x5 card on where you want to put your stop. So now I've locked in dinner for two. I was using the PSAR button. Make a fraction. I'll get long on a PSAR flip. I'll get short on a resumption. I'll use the box. Feels like about right. Whew. That was fast. This would be routine. And that sort of completes that cycle. You can imagine a typical break of the VWAP, and then that trade pays off. So once you apply that same kind of standard methodology, sometimes it works, and then sometimes that sucker really pays off, and you get this one. And that's very much what the day looked like for me today. Pretty close. So we ended up getting this favorable move. Got paid here. We lost from here to here. That was a negative. This one was a negative. And then this one was a positive. So if I were to total all that crap up, we made money on that one because we were short. And we lost money on this one. And we made money on this one. And we made money on this one. Come on, Kenneth. So what we ended up netting the blue, which is $1.50. So let's call the excess piece up here, slippage and whatever, slippage and commission. So we made about $1.50, and I was using a standard 60 cents of risk. So that's about 2.5 um, 2.5 execution R, which puts it about 0.7 position sizing R. So that's about a 0.7 day on that symbol for the morning session. Okay. That's that one. $2.5 XR. So when I'm trading $400 a day, or I'm sorry, $400 for a position risk, that's about net 280 that morning on one series of trades. That's $280 in 2.5 hours. That's $100 an hour. Any questions on that methodology? A kind of a brute force and ignorance way of doing that? If so, send me your questions. Okay. Next one up. All right. So here we are. Sorry. Let's go here. So from a deep distance, have no idea what this symbol is. All I know is that it's 1:30 Eastern in the afternoon. I want you to notice a couple things. So I'm going to ask you which way you want to play out of this Z3 pinch. It's not quite a super pinch yet because this probably hasn't come into that box yet, but it's getting close. That's about as sideways quiet channel as you can expect. It had a early, in the morning session, it must have gone up and then flattened out because the RL270 peaked right here and is now slowly decaying. So whatever gains it made, it's been holding stable right here. You notice this dotted orange line is the PSAR. I'm sorry. The dotted orange line was the VWAP. That sounded wrong in my ear, even as I said it. So there's the RL270. What I'm going to say is a couple places that really strike me as you could pick like where you want. I'm going to ask you where you want to play the. It'd be right from that green line right on the edge of that, or the red line there. So let me get some stickers here real quick. Step. And I'm going to just pick this as sort of like a halfway line. I want you to be prepared in these kinds of conditions that whenever that thing makes its move, and here's what I'm going to do on 2 just to make this kind of feel symmetrical. I'm going to slide that down to the RL270, and now that's like halfway between 1 and 3. So 3 is the peak of intraday fair value as measured by the RL270. 1 and 4 are that straddle breakout of the sideways quiet channel super pinch, or the Z3 pinch for sure. Using 2 and 5 as the breakout would be sort of like, yeah, it broke out significantly from the previous Z3 pinch way over here. So I'm waiting to get some confirmation. 3 and 6 are like double confirmation of short or long. So I want you to decide. The day was grinding up. This thing was right even with the market. This is the market itself. It had a grinding move up, small range, not a violent move. It was grinding and then has stabilized right here. You can see the VWAP right in the middle. And if I'm going to zoom in here just a little bit so you can get a so I'll try to get it just, yeah. So that's sort of what it looks like right now. Long at 1, 2, or 3, short at 4, 5, or 6, either or both. What would be your trailing strategy? So make your decisions. I'm just going to play the straight breakout. And what I'm going to do is strike. Whoops. When it's time to move my stop, whichever way it goes, I'm going to put. I'm gonna leave that stop in place and then just hit the strike on it when it goes. Okay, so that's my. I'm going to use 1 and 4 breakout, and essentially use the yellow box as my risk. So I'm long, and my stop is here. I'm moving it just below the VWAP. So let me play that again. So it started here. So that's my moment of entry. Okay. So I'm right under that Z3 line, that previous Z3 excursion. That feels good, so I'm using that line. So on 1 unit of yellow risk, that's like 1, 2, 3, call it 4-ish, 4 units of execution gain. So we're at 6.5 for the day of execution risk. Almost makes you want to be long from there, doesn't it? Because if that PSAR gets hit, dude, I'm out. And now I want you to notice something really clever. How much risk am I taking on that re-entry? A third of the initial execution risk. So if this thing just goes like it has already just gone, that could really be amazing. But I'm not taking very much risk at all because it's after 2:15 Eastern. Yeah, done. And now look what we have. We can be short with a risk right here. All right, so our gain on that one would be something like probably here. So now we can stack that sucker up like that, minus that little fraction. Just going to bring it down. So now I want to just measure some bricks. All right, so these are the numbers of gains. 1, 2, 3, 4, 5. Plus 2.5 on the other one, so we're at 7.5. All right, so here's your situation. You have a symbol. Let's see what we can see. Price, here's the VWAP and the RL270. This last little bit of rebound has pulled the RL270 up. The VWAP is just mucking along. You've got a series of rising lows. It's kind of coming into the station right here. So price is right square in the middle, right there. Would you go long or short, or long and short? And if so, so if you go long at 1 or 2 or 3, so 1 is a Z2 breakout and an emerging dragon. 2 would be a Z3 breakout. 3 would be the maximum Z3 breakout. 4 is like a PSAR. 5 would be the earliest PSAR start. 5 would be the earliest PSAR. 4 would be like a dragon breakdown. 6 would be a Z3 excursion, and it gives you a sort of a symmetry. So if you're long 1, 2, or 3, and where would your stop be? And then if it breaks out in your direction, when will you strike to put your stop at no lose plus dinner for 2? I see we're well extended above the VWAP. There's a lot of volume down here. There was a bunch of volume transacted up here before. So it's been that high before. Okay. So lock in your decisions. If you're long, is it 1, 2, or 3? And where's your I stop? And then where would your no lose plus dinner for 2 would be? By the time we get to July, you're going to be saying, where would I put my second position in? Because here's the other thing I want to go back to the last trade. That was +5 execution R on a breakout from 1 and no additional positions. And there were places that we could have put a second position on and then picked up another couple execution Rs. So we're at 7.5 right now, but we could be at 10. Okay, so back to our little discussion. Long at 1, 2, or 3, short at 4, 5, or 6. Where is your initial stop? Where is your no lose plus dinner for 2? Okay. Yeah, here we go. So what I want you to notice is this is that fake 1, go 2. And if you can get that, that's why you want that that RLXD. So if you got short at 4, 5, or 6, the stop and reverse in that purple circle is freaking magic. So let's say that you got, let's say that you chose 4. You might have decided to scratch and then got long here. So if you got short at 4, you probably scratch that trade. If you got short at 5, you take a fractional loss on that trade. If you got short at 6, you take a marginal loss on that trade. So the worst case would be if you got short at 6 and then took this loss. Sorry for my clumsiness here. So on your the worst set of choices in retrospect, the worst lottery tickets, is that you probably do this, and then you make, I'm going to say you probably get out here. And you lose that much. Oops. So, sorry, I meant to do it this way. So you net that much, and then something like that's probably 2 more you net 2 more execution R. So now we're either at we're at conservative 9.5 for the day. So here's one. You are at you got a blue line for price right here. You see the hump of the price is at just north of that line there, up at 3 green. The PSAR breakout would be 1, crossing the Bollinger Band line at 2, leaving the river at 3-ish. Well, actually, that's probably like an emerging dragon. Let me clean that up just a little bit. He was supposed to be like right on the breakout of the dragon. If you refine that to, a river breakout, I wouldn't be offended, but let's just leave it at the dragon for right now. So long at 1, 2, or 3, short at 4, 5, or 6. 4 would be the breakdown of the RL10 at the belly of this thing right here. This is the belly of the RL10, and that's a gateway to this kind of price action. 5 would be departing the floodplain. 6 would be a breakdown, new low of the day. So price is right there on the yellow dot, in between the pinch there of the green and the red. My choice would probably be the let's see here. I'm going to say 2. I'm going to split the difference. That's like in the middle of the pocket. So if I was looking at the pocket right here, right, I would say, from the hump of the dragon down to, in here, that whole area there is the pocket. So I'm just going to pick like midway up the pocket, like right here. So instead of getting the most aggressive PSAR break and not waiting for the true emerging dragon, I'm just going to pick like the midpoint at the Bollinger Band mean. So I'm just going to take that. Okay. Just to give you some different ideas on things that can be done. And as far as the breakdown goes, I think I'm going to wait for it to cross below the RL90 and like I want it to get below 4. I'm not ready to get right at 4. That's so close. I might be like right there. So I'm asking you to think about now, be ready to strike, or if you had to give somebody instructions, what price level would you want to see to get to no lose plus dinner for 2 on either one of these trades? Long, second position, not going to lose any money, probably out. So somewhere in here, I want to get that second position in and then measured against my initial risk. You know, if I'm long here, then my stop is probably P star. So let's count the first position. He makes 1, 2. The second position makes 1. So that's a total of 3. So that puts us at 12.5 or 15, depending on whether or not we'd gotten that other position. So even if we say 12, and we divide that by 3 or 4, that gives us about 3 position sizing R for the day. And with one bullet being $400, that's about net $1,200 today. And my job is to make 2R a week. So 800 a week. Because if I can make 800 a week, that's 40 grand. Which is more than the average annual income in the United States. So that's what I want to say about that. That's very similar. I think it'll be a little more elegant by the time we get to July for the live trading workshop, but that's what it's going to feel like, is put you in a position, be prepared to answer those trade frame questions. And what I'm going to do in July is you're not going to know if it's an intraday trade or a swing trade, because this could just as easily have been weekly charts, weekly bars. It's all the same patterns. Okay. So there will be a mix of those, and then we will reveal them after you trade the patterns and make your decisions. Then you'll realize, you know what, it really doesn't matter what the time frame is, except how many minutes or hours a day, a week, a month I want to spend to manage, and then we'll express those gains over swing trading and position trading and day trading. So that's kind of what it feels like. That was 90 minutes. And in 90 minutes, we did 4 charts and about 8 trades. That's about 10 minutes of effort for each case study. And if you can do a 90-minute session a day, that's 50 trade cases a week. That's 200 practice sessions in a month. And we know from some of those other studies we've done in the research weekend, that trading as craft knowledge, that around 600 case studies, guys were just kind of magically getting it. I don't know if it takes that long, but that's how you can practice this stuff. And I'm telling you, the way to do this is to get 4 guys in a group, and each one of you prepare one, and then take turns leading each other through it. And then you don't even need me in July. I mean, I'd like to have you there for the workshop and whatnot, but you can do this. Okay. I'm gonna erase that from the video. I don't want people to hear. But that's what I would be doing. If you're in the Euros, I see some Euros in there. Guys, that's what you should be doing, and concentrating on the patterns that you want to work on. Like, let's say that you wanted to just work on mechanical swing trading. Go through the signals and find, hey, here's some 5DDs, and set them up, and then practice trading forward just like this, and then document your response with accountability. I believe that has more value than running some computer algorithms where you're not even looking at the charts and you're trusting the machine's code to execute properly. I mean, do whatever you want. But forward paper trade testing is what we just did right there, bar by bar, with the decision rules in front of you, and learning to write those instructions so that somebody else could execute. And that's how you test the quality and the clarity of your written instructions. So that's everything I got for you today. We'll have the reports out early tomorrow. I may stay up and just get them done. It's still early. And Friday night's my late night. And kids are coming home tomorrow, so maybe I'll get it all done tonight and get it published as soon as I can. But that's everything I got for you. We were all over the place today, from as broad about leadership and strategic thinking as we wanted to be, getting down to something like a culture and a process map for continuous improvement and operational excellence, what some of those techniques might look like when you drill down to certain methods. Here is one very specific practical application of that entire philosophy and culture expressed in a single kind of battle drill. How do you approach the assessment of one case study by treating it as a Gemba walk with you and your accountability partner, infused by the spirit of respect? And then once you get used to that, the next step up out of that is how you then start applying these elements of system design to take the good qualities that you learned about this habit of thinking from your Gemba walk. That's how you build designers, as you get guys that are grounded in the Gemba walk on individual case studies, and then work up to the design of systems and decision making and the culture that applies it to these design issues. Lisa asked, let's see, if we do not have TC2000, are there instructions for how to get it set up on other systems? Yeah, that's in the resources in the base camp, boot camp videos on LMS, and in the base camp. There is just a set of what all the exact parameters are for each of the indicators. Piece of cake. Simple. And then let's see. No, you don't need the TC2000 bundle, because you're going to be trading those things either off of my screen, or I'll give you the case study setup or something like that. But it'll be off of just a common frame of reference. It'll look just like it did right there. It'll be up on the screen, and then you can. I might even do something like where we put it inside I'm going to play around with it, maybe, so you can move the little lines and the buttons around on the like on a PowerPoint chart, for crying out loud, and that way you can practice on the case study. That's probably what I'll do, so it's platform independent, and it'll be easier to manipulate the objects in PowerPoint. So yeah, you don't need a TC2000 bundle. I just believe that if you don't have a platform that you love, TC2000 is one hell of a good platform, and that bundle will save you a ton of time, because what it really does is gives you all the dashboards that are connected to live data. So if you're doing like intraday trading or swing trading and you want to study 1,000 symbols to find just the patterns you like, it's already automated and built for you. It's a error-proof, bulletproof robot who is your executive assistant to give you the signals and to put you into the kinds of trade frames that you want to trade. That's why we put the videos in there for the TC2000, in the TC2000 lesson, in the hybrid trading, so you can see what dashboarding looks like, so that you can see what kind of an automated system you can implement to support the kinds of decisions you want to make, the kinds of trades you want to find. Automate all that stuff. You don't have to use TC2000. You don't have to use our bundle. What we're trying to do is teach you to dashboard and find your little moment of Zen, your garden of peace and tranquility, so you can trade in a relaxed state of mind, supported by this culture of continuous improvement and small steps. So there you are. That's all I got for you. I'm going to stop the recording. I'll stick around for a few seconds if you got any other questions.